Hi guys, in this video I am going to tell you the basic things about candlesticks and how you can read the candlesticks charts in this video. My name is Sharath. I have been trading from so many years in stock market and I have little more knowledge about stock market trading, and I am going to teach you everything about stock market trading in this channel. In this video we are going to learn about what is candlesticks and how to read candlesticks charts and important candlesticks in our chart. So in this video I am going to cover these topics so that you can learn about candlesticks basic. Whoever wants to start in share market, if they don't know about candlesticks, then they can watch this video and gain good knowledge about candlesticks, and I'm sure you will get a good knowledge about candlesticks and candlesticks charts so that you can do investing as well as day trading in your stock market business. So let's start this video. So this is how the candlesticks charts looks like, and there are so many ways that the price can be represented on a chart. Most of the people use candlesticks charts because it is very easy and you can understand the price movement, high and low, open, close of the price for different time frames. So this is how the candlesticks chart looks like. So how this can be defined and how this can be read or how this can be analyzed as a beginner. You can see here there are so many big candles and small candles, and there are two different colors of candles, red candle and green candle. So what does it represent? And you can see the size of the candles also, small red candle and big red candle. You can see big green candle and even small green candle. So how to read the charts using candlesticks? So let us start the video to understand how we can learn and read the chart by using candlesticks. So candlesticks charts are thought to have been developed in 18th century by Japanese rice traders. Actually, they were introduced to Western world, that is stock market, by Steve Nishan in his book Japanese Candlestick Charting Techniques. So this is how the candlestick was introduced to stock market trading, and candlesticks are the major part of technical analysis, and most of the people analyze the chart by using candlesticks. So this is how the candlesticks looks like, and there will be two colors for candles to represent. So these two candles represent upper side movement and downside movement of the price. Here you can see if the candle is in green, that represent upper side movement of the price. If the candle is in red, then it represents downside movement of the price. So in candle you can see there are two major parts. This is called as wick and this is called as body. So in these candles we have four major things to understand. One is open and one is close, and another one is high and low. These four things are very important in candle, and these are the only four things we can look in the candle and we can understand the price movement in our chart. So this is how the green candle looks like. In green candle the price moves from downside to upper side. So always price opens at below side, then the price move to a higher side or a lower side depending upon the fluctuation of the stock. So this is how the green candle forms. When the price opens here, if the price comes for a low and again goes up and makes a high, and if it doesn't sustain there and come back and make a close here, then we will get a green candle like this. So in green candle we have open in downside, and in red candle always price comes from the top to bottom. So red candle will be formed when open will be at the top side. So price will come down and make a close at the bottom side. So this is the only difference we have with the red candle and green candle. In green candle we have open at the downside, and in red candle we have open at the top side, because in green candle the price moves from downside to upper side. In red candle price falls from upper side to downside. So that is how the candle will be formed. For example, if the candle opens here and comes down and makes a close here, then it will become a red candle. Okay. So same in the case of this one also. If the price opens here and makes a movement to the upper side and closes here, then it will become a green candle. So this is how the candle will be formed. In this candle we have two colors and four major parts, and we have body and wick. These are the only things we should consider in candles. Candles are very easy to understand and you can analyze your price in a very easy way by using candles. So how the candle will be formed? Here you can see we have a candle here. For example, let us assume this candle has 5-minute candle and this is the bullish candle because open is at the downside and close is at the above side or a top side. For example, to form this candle, the price has to move in certain direction. So we know this is a green candle, so price should move from downside to upper side. So we have a scenario here. For example, if the price opens here and makes a low, and we can mark this as a wick because price didn't closed here. So again price moves to upper side and makes a high and comes down and closes here. So we always consider body as the open and close part of the candle. This is the open and we draw a straight line here, and this is the close, we draw a straight line here, and open and close will become a body. The places where the price went and didn't sustain becomes the high, and at the place where price came below and didn't sustain becomes the low. So to represent that, we will just draw wick here because price didn't sustain here. Just to represent the high and low, we draw wick in the candle. So this is how the candle will be formed. This is how price has fluctuated in 5 minutes time frame. So this is how the candle will be formed. Again, let us consider another situation where price opens here, but price moves to a upper side, and let's call that point as point number 1, and the price suddenly falls down to point number 2, but price doesn't sustain there and makes a upper side move again and closes at this point. Let us assume this is the price movement that has been done in 5 minutes. So I have to represent this price movement in 5 minutes candlestick. So this is the 5-minute candlesticks. So if I wanted to draw a candle for this price movement, then I have to mark the open position first. Then I have to look for the close. So close is at the top side. So it will become green candle. So, and you can see here, let us consider this as a body and we have high and lows. So this is the open and this is the low. So we will draw it as a wick and this is the high. We will just draw wick to represent high. This is how we represent price movement in 5 minutes candlesticks, or whatever the time frame, the price movement will be somewhere like this, or price will be fluctuated for every minute. This is how we represent candlesticks. This is how we think about the price movement by looking at the candlesticks. Let us consider this example. Here you can see 5 candles of 1 minute time frame. This has been created in 1 minute and this is created in 2nd minute and 3rd and 4th and finally 5 minutes. In 5 minutes price has moved from this point to this point. So in 5 minutes there were 5 candles. Okay, this is a 1 minute time frame chart and you can see here there are 5 candles. For every price fluctuation in 1 minute there is a candle representation. So if I wanted to represent these 5 candles in one single candle, that is 5-minute candle, then I have to create one single candle for these 5 candles. So this will be the open and here you can see this is the close. The price has moved from downside to upside, so it is a close. We will mark it as a body and this is the high. We have to just create a wick and this is the low and we have to create a wick here. So this is how 5 minutes candle looks like for these 5 candles. So you can represent one single candle for 5 minutes, 10 minutes, 15 minutes for a day depending upon your requirement. So this is how single candle of 5 minutes looks for this price fluctuation. So here you can see this is the single candle that is created in 5 minutes for this 5 candles. Let us consider another example. Here you can see 15 candles, all are in 1 minute time frame. 1, 2 and here 15 candles for 1 minute time frame. This is the price movement for 15 minutes. We have 15 candles of 1 minute. If I wanted to represent these 15 candles in a single candle, that is 15 minutes candlesticks, then I have to first mark the open. So it will become a green candle because price moved from downside to upside. Then have to mark the close. So this is how it looks and we will create a body for this open and close. Then we will mark the high. So we will mark the high as a wick and we will mark the low as a wick. Here you can see we have small wick, so just a small wick here. So this is how 15 minutes candlesticks look for this 15 minutes price fluctuation. Here you can see there is a big 15 minutes candle. This is same of these 15 candles and this is one single candle representing 15 minutes of time fluctuation. So this is how you should draw a candle and this is how you should read candlestick patterns. Let us see these candlesticks in our chart. Here you can see 5-minute candlestick chart. Here you can see the time frame 5 minute. You will get different time frames according to your need. 5 minutes, 10 minutes, 15 minutes, 1 day, 30 minutes, like that. You have so many time frames. You can set accordingly according to your need. So you can see here, this is the chart of 2nd March. You can see, so here you can see 5 minutes candlesticks. You can see the chart of whole day 2nd March till market end. So price has opened here and made a low, and that means bearish candle has been formed. Price came down and closed here. Then there was a low also and you can't see the high in this candle. So this is how there are different candles here for whole day. For example, if I wanted to mark one single candle for whole day, that is I wanted to see how price fluctuated in single candle. So I have to mark the open first, then I have to mark the close. You can see here price opened here, price came down and made a movement here, then came down, then made a upside movement, then came down and made a low here, then moved to upper side, then came down and finally it closed here. So we will mark this close level, then we will create a body. But in this you should know one thing, price made a downside movement, so candle will be in red. So it won't be a green candle because price came downside. So body will be red. Okay. So when the price comes down, body will be in red color. So we know the low here. Price came here and then made a upside movement and closed here. So this will be the low. We will mark a wick here, wick till here. So you can see the high here. This is the high, then price came down and made close here. So we will mark the wick for this high also. So this is how whole day candlesticks looks like. That is 1 day time frame candlesticks will look like this in your chart if you choose 1 day time frame here. So this is how we should mark the candlesticks in our chart, or we should read candlesticks in our chart. So this is how we should read the candlesticks. In next video, I will explain how we can draw the major support lines or resistance lines and how we can predict the price movement in our stock or index to get profit in our day trading or investing. So I will explain how we can technically analyze chart by using candlesticks in our next video. I hope you will like this video and share this video with your friends. Please don't forget to subscribe our channel and do comment your opinion in the comment box. Thank you.